Hello and welcome back to the Crypto Club podcast. I am Gons, and as always, we have Hobo here as well.
Yep. Pleasure to be bringing you episode 9 of the Crypto Club.
Woo! These are flying by, man. They feel like we do them like every other day.
I know. It really does. I swear every time we do it, we just talk about the market crashing even more.
Yeah, some new story and some silver linings, but
Right.
I mean, the good thing, at least in this market, is everything is like really interesting, and so time really does fly.
For sure.
So we've got some good stories lined up from this past week that we'll get into, starting with our favorite, Mark Cuban. You want to lead us off, Hobo?
Yeah. So, Mark Cuban, crypto firms sustained by cheap, easy money will disappear and crash. And we've already seen some of this taking place with a lot of DeFi projects just simply running out of money. So, billionaire owner of the Dallas Mavericks, Mark Cuban, has weighed in on the latest crypto crash, saying that projects with no valid business model will eventually die out. In stocks and crypto, you will see companies that were sustained by cheap, easy money, but didn't have valid business prospects will disappear, Cuban said in an interview with Fortune. The 63-year-old entrepreneur also recalled the American magnate Warren Buffett, who once said that when the tide goes out, you get to see who is swimming naked. Last month, amid a broader tech market decline, the crypto industry was rocked by the implosion of the Terra ecosystem as its algorithmic stablecoin UST lost its dollar peg, wiping out billions in investor wealth. So yeah, I mean, really, it can just be compared to the dot-com bubble, where all these companies were raising tons of money with just business models that weren't going to work out, so we're kind of seeing the same thing play out here in crypto, where you got all of these companies that raised tons of funds when funding was easy, and their business model is just not working out when things are getting tough, and what capital is left is flowing to value rather than speculation.
Absolutely. So, I mean, it's right on the money, right? We talked about it on the Twitter Spaces, which we host every week, Scan Space. So check that out on our Twitter. But we kind of spoke about this a little bit in our previous Twitter Space this week. And what essentially is going to happen is there's not enough capital in the market anymore to fund all these different ideas. And there's not enough hype to sustain all the irrelevant DeFi projects.
Right.
So what you're going to see is you're going to see utility thrive in this market, and you're going to see very limited success for meme coins and community coins, because there isn't much of a community left compared to what we used to have, right?
For sure.
And so as an investor, you have to kind of, and I love how you compared it to the dot-com bubble, because I feel like it's very similar in the sense that we are now entering a recession, almost a global recession per se, right? And Bitcoin and cryptocurrency in general have never been through that kind of a cycle.
Mm-hmm.
So you cannot historically go back into Bitcoin's history and say, oh, it looks similar to this. We've never been in this territory. This is uncharted waters. It would be better to go into a risk on assets history that has been through and survived a crisis like this, or some kind of like bear market or dot-com bubble or housing bubble, some kind of major either nationwide or global crisis, and see how those assets perform, those risk on assets. And Bitcoin should probably do something similar in that sense. Granted, this may be the worst it gets, and Putin announces next week that he's done with the war in Ukraine and sanctions get lifted and everything goes back to normal. I mean, look, that would be amazing. But there's so many things that have pushed us over the edge, and we're unfortunately just getting started. I mean, there's so much more that could go wrong. You've got USDT that could go wrong. And what ultimately is going to happen is all these projects, all these developers that were here for the cheap, easy money, like Mark Cuban says, they will disappear. And you're already starting to see them disappear. Some of your favorite Telegram callers or your favorite Twitter influencers, they're long gone. They've been gone for 2 months.
Yeah, they hurt themselves along with their followers.
Absolutely. And they're long gone because they were here for the cheap money.
For sure.
They were not here to build and to push the industry and the ecosystem forward. So my advice to anybody listening who cares to listen is just like what they said about Warren Buffett. When the tide goes down, you will see who is still swimming. And those are the people and the projects you want to get behind.
Right.
Because the people that survive this market are the ones that are going to do exceptionally well in the next cycle.
100%. You know, I mean, you look at all the charts of all the altcoins that really popped this year. I mean, they're 99% below where they're at now just a couple of years ago. So,
yeah,
you know,
they all do the same thing. What I noticed when I did some research is a lot of the altcoins on the COVID crash, they dropped 50 to 80%, if not more.
Right.
And the issue is, you know, 1 or 2 years later, they skyrocketed like 8, 9, 10, 20, 30x from that bottom.
Mm-hmm.
So, you know, you have to kind of zoom out and have a bigger picture. Yes, it's fun to make quick, easy money in a bull market, and quite frankly, anybody can do it.
Right.
But if you're really smart and you stick to the fundamentals and you do your research on projects and teams, you will find those hidden gems that are going to stick around and build something that's going to elevate the space to a next level. And those are the people that are going to be rewarded for it. Not right away, but in the next cycle.
Mm-hmm. You know, I definitely agree with all of those points. We'll just get on with the article here. So, the crypto industry took a further hit this week after Celsius Network, a crypto lending platform with $11.8 billion in asset under management, abruptly stopped withdrawals. Major cryptocurrencies plunged following the announcement, with the price of Bitcoin touching $20,000 on Wednesday. As the combined market capitalization of the crypto market slipped below $1 trillion, several leading crypto companies, including America's digital asset exchange Coinbase and lending platform BlockFi, moved to cut staff, bringing more uncertainty to the market. The crypto crash also drew increased attention to the software manufacturer MicroStrategy, which is reportedly facing a margin call on a $205 million Bitcoin-backed loan, the Silvergate Bank that was taken in March to buy more crypto, as well as the Singapore-based crypto hedge fund, Three Arrows Capital, which is in danger of seeing its multi-million-dollar crypto loans liquidated. So despite the clearly negative market environment, Cuban sees light at the end of the tunnel and is placing his bets on innovation. According to the billionaire, disruptive applications and technology released during a bear market, whether stocks or crypto or any business, will always find a market and succeed. Cuban's latest remarks also echo comments he made last month when he compared the current state of crypto industry with the dot-com bubble of the early 2000s. Back then, Cuban also said that he still sees plenty of room for advancement, especially in areas involving commercial smart contract platforms replacing software as a service. So yeah, I mean, really, Mark Cuban's got the right idea. You know, as we were talking about earlier, the projects that keep their head down in the bear and build are going to be the ones that succeed. You know, innovation is king during times like this.
Yeah, and he used a good term there, which is disruptors, right? Those are the Ubers. Those are the, you know, the Google of its time. Those are people that see the space and don't just say, I'm gonna build like a pretty good, you know, Uniswap, like copycat. Like, no, I see potential, but I also see ways to improve this and greatly improve it. Those are the disruptors that people really get behind and push, because they pave the way for new growth and technology in the space. So it's going to be really interesting to see who survives from
Right.
this bear market. But rest assured, the people that make the most money here are definitely going to be the ones that stick around and find these, projects and stuff.
As always.
It'd be cool to see Mark Cuban in the CoinScan
I know.
Discord or Telegram.
I know, I was just thinking that he likes innovation, so.
Hey,
But let's kind of get on to the next story here. So, crypto crash is wreaking havoc on DeFi protocols and centralized exchanges. On Monday, a heavy cryptocurrency sell-off in the markets caused significant ripples for projects and entities alike. On popular decentralized finance, or DeFi lending protocol Aave, utilization rates have fallen across nearly all stablecoin borrowings, most notably borrowings for Binance USD, now stand at a mere 30% compared to a high of 80% back in May. The utilization rate is the ratio of borrowed to deposited funds. Since borrowers are required to post digital asset collateral before taking out a loan on Aave, users are likely withdrawing in mass in light of Monda's sell-off to prevent liquidation. Data from DeFi Llama indicates that Aave's total value locked has fallen from around 33.5 billion in last October to 8.1 billion currently. According to CryptoRank platform, TVL in overall DeFi protocols has fallen by 55% since the end of April, driven in part by capital flight and a decrease in the value of digital assets. Currently, there is 115 billion worth of funds remaining, with 72 billion located on the Ethereum blockchain. It represents a fraction of the 303 billion in peak TVL witnessed in November 2021. So yeah, I mean, naturally, with price decreases, the total value locked up is going to decrease. You could have 1,000 ETH locked up at $4,000. Naturally, that's going to be more valuable than 1,000 ETH locked up at $1,000. But surely you have these, people withdrawing and whatnot that just adds to the cascade and is causing that. So
exactly.
Over the weekend.
And what before you go on, what I was gonna say is, as capital exits the market, it's putting a lot of stress on multiple different platforms and projects and protocols, and so it's something to keep an eye on. And really, I recommend, as an investor, to hold on to your assets personally on your wallet, because even if you have like your tokens or your USDC, hopefully not USDT, but if you have those on these protocols and they get into a situation where people are withdrawing so much money that they no longer can fund themselves, or they have to liquidate, or they have to freeze assets, you do not want to be in that situation where you can't withdraw your money.
Right.
And at that point, it is not actually your money, it is their money, and you're just a user on their site until you withdraw. So if they freeze withdrawals, you're screwed. So it's something that, it goes back in part to what I was saying earlier, that we haven't really seen the worst of it yet, because we've only seen a couple of these protocols really run into issues where they're having to, sell assets and quickly, put up more collateral to, avoid issues and, going below water.
Right.
So the more protocols and projects that have to go through this, there's going to be some that crash like Luna, and it's just going to hurt the market even more. So get ahead of it.
Right.
Put your money in your wallet that you control, and be responsible for your own money.
For sure. It makes me think of, like bank insolvency, right? Like banks, sure, they've got your money, you can go in and withdraw money, but each physical location only carries so much cash on hand.
Mm-hmm.
So if you get a ton of customers going to withdraw a bunch of money at the same time, eventually that specific bank is going to run out of liquidity, just because of physical and geographical restrictions in the real world, where you're unlikely to have a massive flock of people going to the same bank to withdraw a ton of funds at once just because of the physical location. It's kind of the same concept, but in DeFi, like, there's not that physicality barrier. everyone can go withdraw their funds, and there's not logically anything stopping a ton of people from withdrawing a ton of funds at the same time.
Yeah, and the other thing too is banks have the luxury of having been around for centuries now, and so they have massive amounts of collateral and capital that they just move around in between the banks, whereas crypto is so new still, and it's really a fraction compared to the banking system. But if you were to apply the same amount of selling pressure that we have in the crypto markets now to the banking industry, you would see the exact same thing. You would see some smaller chain banks collapsing, right? And you would see I mean, we already have these these systems in place. Actually, it just kind of dawned on me, this is probably why banks have withdrawal limits in place to kind of circumvent these kind of situations. The daily withdrawal limits of $3,000 or $5,000.
Right.
So it may be smart moving forward for exchanges or protocols like these, at least lending protocols that really survive off capital staying locked up, to have a withdrawal limit so that they don't have these sudden flash sell-offs and really put themselves in danger.
For sure.
So that's food for thought. But yeah, we would be seeing the same thing if there was this kind of selling pressure in the banking system. So it's nothing to be like, oh, crypto's sketchy. No, it's just growing pains, and it's a very small market currently. And so when you have these huge fluctuations, this is what you get.
Right. Yeah, so over the weekend, cryptocurrency exchange Crypto.com announced that it was laying off 260 or 5% of its corporate workforce, citing difficult market conditions. Just last month, the company also stated it was significantly cutting back rewards for its popular crypto-backed debit card. Annual cashback APYs for spending have reportedly been scaled back from 2% to 8% to just 0% to 2% for cardholders with unstaked assets. In an emotional message posted by founders Monday morning, BlockFi also announced that it was laying off 20% of its 850-strong staff. The firm cites the need to achieve profitability goals for the long haul in making the decision. Similarly, crypto exchange Coinbase has decided to extend a hiring freeze and rescinded job offers to hundreds of new hires. Though Brian Armstrong, its CEO, has said funds are safe amid bankruptcy protection fears surrounding the exchange, other major crypto firms are reportedly cutting 10% of their staff amid the ongoing bear market. So yeah, I don't think it takes a genius to understand why these exchanges are having to lay off workers or freeze hiring. I mean, we've seen crypto markets take a devastating hit, and naturally, these exchanges have a business model that is reliant on the crypto market.
Man, 20% of 850 too.
Yeah,
so BlockFi is really struggling as well in this market. And some people are saying that it's they could potentially be one of the next platforms to really struggle.
Right.
So yeah, just be safe out there, guys. Do your research. Like, if you've got money in BlockFi and you see this kind of article that BlockFi is laying off 20% of their staff, like that's a sign that there's something serious going on in their back end, and it's probably something that you should consider preserving your capital.
Right. And I do know BlockFi recently had to pay a $100 million settlement to the SEC regarding its like staking platform or whatever on the exchange. It's yield platform.
So I mean, and the reality is, a lot of this was not sustainable, right? 10%, and these were like the tame ones. I remember talking to people when I first saw all these lending protocols pop up, and I'm like, man, there's 100% APY, like crypto's crazy. And I would be like, oh, and there's 10%, 20% ones. Those are the safe ones. No one's doing those. And it goes to show you, even the ones that are 10%, 15% are collapsing because it's not sustainable.
Hide your kids, hide your wife. But yep, definitely a mainstream wake-up call. You know, I'm sure in previous cycles there's been some similar things happening, but, you know, didn't have quite the eyes on it. And, you know, now everyone's watching all these protocols fail. And really learning about the risks. So it'll be interesting to see if such protocols come back during the next bull run.
I think they have the potential to, and the ability to, because at the end of the day, they are Ponzi-like as far as how they reward users and stuff. But in reality, it's only at that point right now because they depend on the value of native tokens. Whereas in the future, right, it's like your banking system. And banks make a stupid amount of money.
Right.
But on a protocol, like a lending protocol, or like a protocol where, you know, users get rewards for holding tokens based on the amount of users using that platform or that blockchain, right? We will eventually get to a point in crypto where you have a lot of active daily users and revenue is made from their activity, not from the value of their assets. And when we get to that point, we may see a sustainable way, you know, to get yield on what you're staking on platforms like that. Because bull or bear market, people still have to pay their bills or still have to do this or that. And if we're using blockchain technology for it, then there's still activity and traffic to, you know, to generate revenue from. But right now it's just all asset based, all speculative.
Right.
And we've lost users because, quite simply, it was just a freak show of a market.
Yeah.
And we kicked retail's ass right out the door.
Yep, for sure.
So it will probably be sustainable and it will probably come back in the future, but it definitely was not sustainable in this small, you know, in the current scale of everything.
No, right. But yeah, hopefully none of the too big players get down bad enough. You know, I mean, that could have reverberating effects throughout the market, as we saw with Luna. But, you know, I surely don't think the pain is over, and we'll likely see some more kind of groundbreaking things take effect.
I mean, it's kind of, before we get into the next one, to kind of finish off this thought, it's kind of scary the amount of people that truly believe this is the bottom, right? They scream that, you know, institutions are involved and, you know, there's arenas with crypto, you know, on it. And yes, that's true, but you forget how new crypto is, right? I mean, there could be a hack of a protocol, and imagine a large scale hack at current price levels that drains even more liquidity out of the ecosystem. It could be devastating, right?
Right, and then liquidates everyone on top of that.
Exactly. So you could have that. That's not something you can foresee, right? And it's not something you should necessarily, you know, base any kind of prediction or financial move off of, but it's something to consider.
Right.
Right now we're in, you know, uncharted waters and we're honestly on thin ice. So anything can really push us over the edge to new levels, which is what happened a few months ago. We were kind of just consolidating, and then out of nowhere, boom, Putin shows up, right?
Mm-hmm.
Declares war, market tanks. All right, then we're holding that level for a little while, and then boom, we have, you know, high inflation that's coming on the rise, and people are selling off and going into cash. And then boom, Luna collapses, right? So all these unforeseen circumstances push the market, and it's not something you can predict or expect, right? So yeah, if the world magically fixes itself tomorrow and there's no issues and no bad actors in the space, then, you know, hey, maybe this is the bottom. But the reality is there's the risk level is very high right now because there's so many possible things that can go wrong right now. So unfortunately, I think that unless like we are super lucky, that there is still some potential downside and some potential issues like USDT collapsing, BlockFi collapsing, some kind of large scale hack. I mean, there's so many things that can really push us over the edge to new issues. Or, I mean, Putin declares World War III in a month, right? I think that would send us into like a frenzy, panic. So
For sure.
yeah, just wanted to get that out of the way because a lot of people just, it's weird. Like, I don't want to say it's like a cult, but you get some people that swear that crypto is
I mean,
like an
there's
immovable object.
yeah, there's always those people that it doesn't matter if we're down here, it doesn't matter if we're at 69,000. There's always people on both sides.
Yeah, I mean, these are also the same people that were saying that crypto is going to 100K in the end of 2021.
Mm-hmm.
So just be careful who you listen to and come to your own conclusions.
Right. Well, kind of leads us into the next story here. So this is saying the next 6 to 12 months to be brutal, but investment planting season starts now, says Arthur Hayes. So although the liquidity situation in financial markets will remain brutal for the next 6 to 12 months, the planting season for asset allocations is now. Before central banks bring their droplets of liquidity, the former BitMEX CEO Arthur Hayes wrote in an essay. It is during this brutal period that we shall discover what multiple the market ascribes to what the faithful believe is game-changing tech. Hayes said in his analysis of the current market conditions, titled Floaters. He went on to warn that although liquidity has dried up to a large extent, and many crypto assets are trading at prices far below their highs from last year, the selling may not be over yet. But despite the current bearishness in the market, which he argued could last for a while, Hayes stated that he has not lost faith in the long-term potential of what he called the critical DeFi verticals that are on sale right now. Still, the former BitMEX boss warned that it will not be a straight line higher. Still, the former BitMEX boss warned that it will not be a straight line higher, even for the highest quality DeFi tokens, and said that it is likely they will get smacked again, possibly falling another 50% or more. For allocators of real assets, however, this is planting season, Hayes wrote, adding, once the rainy season, filled up with fat droplets of central bank liquidity, begins, then it becomes difficult again to procure desirable projects at reasonable valuations. I think that's very true. There are quite a few, kind of DeFi infrastructure tokens that actually generate revenue outside of hype. For example, I bought the Looks Rare token at 20 cents yesterday. That's one of the lowest price to earnings ratio tokens there is, so I thought that looked pretty good. Loaded up on a bit of that yesterday, but there are these tokens in DeFi that truly have revenue behind them, and then there's a lot of massive tokens that don't have anything behind them. I mean, the tokenomics might even plan for it to go to zero eventually, like we saw in the UST and Luna situation.
Mm-hmm. Yeah, right now is the time to plant your seeds and water your garden and be patient.
Right. And research, really thoroughly understand what you are getting yourself into, as you should at all times, but it's much more important when liquidity is dry. But so also he said that he would be even more excited to own the premier decentralized exchanges that enable the tradability of human culture and one of the backbones of a decentralized internet. So it seems quite obvious he's referring to perhaps an NFT marketplace right here. But meanwhile, Hayes admitted in the essay that his recent prediction for a bottom for Bitcoin of 25,000 to 27,000 and for Ethereum around 1,700 to 1,800 proved to be extremely optimistic. And then he says, when it comes to calling the market, I get it wrong more than I get it right. That's the difference between writing essays and investing, Hayes wrote.
I mean, and likely if we weren't having so many issues globally across all economies and countries,
Mm-hmm.
then that probably would have proven to be somewhat accurate. But again, crypto is such a small space in comparison globally to everything else
Right.
that, and it's risk on. So when you have these kind of events and stuff, this is what you see. You see a lot of liquidity leaving the ecosystem, and then you see massive fluctuation and volatility over
Mm-hmm.
time. As cryptocurrency grows larger and larger, it's actually going to become less volatile because it's going to be more stabilized by the amount of users and capital and liquidity in the system.
Right.
So
Right.
the fact that we fell so much actually goes to show you how new and how early cryptocurrency still is in the world.
Mm-hmm. Yep. No, it's definitely still a maturing market. Um, I mean, although we are seeing lots of the major indexes and stocks down around 30%, that's probably what half of what crypto's fallen.
Yeah, if not, yeah, about half or so.
Yeah. But yep, I like how Arthur Hayes is admitting that he was wrong. That's not something that these people tend to do too often.
That's true.
But yeah, I mean, personally, one of my favorite trading strategies is reverse psychology, right? When everyone is euphoric, that's when you should be concerned. When everyone is concerned, maybe that's when you should start looking at buying something. So I've actually started a dollar cost averaging. I don't care if I have to do it all the way down to 10K or $1,000 Bitcoin for all that matters, but I have started planting the
Seeds.
investment seeds.
There you go. Hobo is buying the dip. Get ready to sell, guys.
Right. right. But yeah, hopefully it's only 6 to 12 months.
I think 6 months is. Before we move on, I actually like that prediction. I do believe it's 6 to 12 months personally. I know you've expressed to me off tape, Hobo, that you've thought it could be a year or two.
Right.
I think the market is moving so quickly. All right, I was not anticipating that we would see these kind of levels, even with the downward pressure from the macro, global issues. But the fact that we've hit it so quickly only indicates that we will probably see a quicker, rise back up. So who knows? Optimistic is definitely 6 months. Don't get me wrong, but end of 2022 would be fantastic. Going into 2023 to kind of bottom out and then start building back up. But it may be a whole year, right? And the other thing too is it may line up perfectly with 2024, which there's a lot of stuff that's going to happen in 2024 that's bullish for crypto. If you want to
For
shed
sure.
some more light on that, Hobo.
Yeah, we've got, Bitcoin halving, which, as far as I'm concerned, has always triggered a run up. And then, of course, it's an election year.
Mm-hmm.
Oh, yeah, and the Fed was mentioning that they're hoping to start cutting rates in 2024, so we'll see how
Exactly.
that lines up.
So, money printer goes back online in 2024, election year in 2024, and then we've got the Bitcoin halving. So,
right.
All of that really does sound pretty bullish for crypto, personally.
Yeah, we will just have to see. But,
Right on. Let's move on.
Yep. So this is just a funny story. I thought I had to throw it in here. We got the Winklevoss twins navigating the crypto winter with the summer tour, singing "Don't Stop Believin'." I don't know how to feel about this. This is like cringe, but also maybe like the bottom signal. I have no idea. But
Oh man, if you were a believer in bottom signals, this would be a bottom signal, but I don't think this is the bottom though.
right.
I'm conflicted.
Right. I know that if if they're singing a different song and it was at the top, I would definitely take that as a top signal.
Oh man, what are these guys doing? Go back to the office.
Right. Right. Don't you have work to be doing, Mr. Winklevoss?
Oh Lord. Okay.
All right. They were part
Is
of the
that a
layoffs.
video?
They fired themselves as part of their layoffs.
Oh, there you go.
Yeah.
Yeah, see, they're base CEOs. Instead of firing all their employees, they just fired themselves and then spread the salary out.
Right.
Hell yeah. Good
No,
guys.
yeah,
You
now the company is just a headless chicken.
never see that happen.
All right. So, as the crypto market bleeds and top crypto assets plunge to the lowest level in years, founders of the Gemini crypto exchange, Cameron and Tyler Winklevoss, are trying to weather the crypto winter by singing "Don't Stop Believin'." The twins covered the American rock band Journey song at a New Jersey rock club last Thursday, according to a video of the gig posted to Twitter. "Oh, so I saw the Winklevoss twins band," wrote Twitter user ArkNem, who said she wanted to document this here anyway because it's by far one of the strangest and most tragically hilarious / infuriating things I've ever witnessed. It'll just
Was
oh my god. I just played a short clip of the video that is tragic. But so notably, this is not their first performance and likely not the last one. In fact, the twins have their own rock band called Mars Junction, which is apparently on some kind of summer tour. Thanks for an amazing time last night, Asbury Park. Great way to kick off the Mars Junction summer tour. Next stop, Dewey Beach tonight at the Bottle and Cork. Can't wait to see you all. How lovely.
You know what? You know what, Hobo?
Tell me what, Guns.
I support them.
Yeah.
At first, it's like I'm trying to wrap my mind around it, but these guys were here through like the stagnant years and the bear market prior to this cycle, and they built, what you could consider to be a pretty successful and good exchange.
Right.
They put in the work, let them live their rock star life. Screw it.
For sure.
Good for them. Good for them.
Yeah.
They definitely need to practice, but good for them.
Right. The twins seem very proud of their band, given that both refer to it as the hard-hitting rock band on their Twitter bios and ask everyone to come see them rock out this summer. However, their artistic taste is apparently not very appealing to everyone. Truly one of the worst things I've ever seen, Twitter user Connor Scully, who says he is a theater director and producer, said in response to a video of the twins singing. A lot of these news outlets like to just pull these random comments off of Twitter. Like this guy just says theater director plus producer in his bio. Who knows if that's actually true? I bet you this outlet is just pulling this comment up as an example. But anyways, I agree with that. You all heard that very short part of that clip. Definitely needs some work. But go Winklevoss twins, I guess.
Power to them.
Right. It's like the opposite of the Bogdanov twins. But yep, quite the silly story. This next one is pretty interesting. We're talking about Elon Musk being sued for $258 billion over Dogecoin pyramid scheme.
Oh my God.
Yeah. Oh. This will be very interesting to see how it plays out.
Keith Johnson. The plaintiff's name is Keith Johnson. It starts with a K, so he's kind of like a Karen.
Right. Right. So Elon Musk was hit with a $258 billion lawsuit that alleges the tech mogul and its high-profile companies are engaged in a crypto pyramid scheme by way of Dogecoin cryptocurrency. In federal court papers filed in Lower Manhattan, the plaintiff, Keith Johnson, names Musk as well as his electric car company Tesla and the space tourism firm SpaceX. Johnson, a U.S. citizen, wants $86 billion in damages, plus tripled damages of $172 billion for losses incurred from trading Dogecoin since 2019. He is seeking to represent a class of people who have lost money investing in Dogecoin. How do you trade Dogecoin since 2019 and lose money? That's my question.
Yeah, this is this is a nothing burger. This guy's just trying to capitalize on. I mean, it's yeah, no, this is so stupid.
Right.
That's all I'm gonna say. This is so stupid.
Yeah, no, I agree. It's an easy way for publicity, negative for Elon Musk, and I guess positive or neutral or whatever for whoever's suing him.
I don't know. I don't even know. Like, I don't think any half rational person sees this and goes like, "Wow, Elon Musk is a criminal. Like,
Right, but I mean,
he
this is
needs to be
just,
taken down."
it's another domino in the whole thing at
Uh,
play. There's been a lot of negativity in the news about Elon recently, so I'm not surprised we're seeing this.
yeah. I don't know. This is just stupid.
Yeah, no, I agree. So the lawsuit also demands that Musk, Tesla, and SpaceX cease promoting Dogecoin. On Thursday, when Dogecoin was worth just north of 6 cents, well off its all-time high of 74 cents in May 2021. Dogecoin is not a currency, stock, or security. It's not backed by gold, other precious metal, or anything at all. You can't eat it, grow it, or wear it, according to the court filing. The lawsuit continues. It doesn't pay interest or dividend. It has no unique utility compared to other cryptocurrencies. It's not secured by a government or private entity. It's simply a fraud whereby greater fools are deceived into buying the coin at a higher price. Musk, the world's richest person, whose net worth was valued by Forbes at $202.9 billion, has not responded to the lawsuit. Earlier this year, Musk revealed that Tesla had begun accepting Dogecoin for transactions in its online store. SpaceX is expected to follow suit in the near future. The announcement sent the value of Dogecoin surging. Tesla also spent $1.5 billion on Bitcoin in February 2021, a move the electric car maker said would provide more flexibility to further diversify and maximize returns on our cash. At the time of the disclosure, the price of Bitcoin was hovering around the $30,000 to $40,000 range. Musk this week broke his silence on the recent collapse in digital asset prices and responded to a meme revealing the next sector of the economy he expects to plunge. Musk reacted to the steep sell-off in Bitcoin, the largest cryptocurrency by market cap, which briefly plunged below $21,000, its lowest level since December 2020. So yeah, I think most of the institutions that got into Bitcoin and are still holding are down quite a bit. I want to say El Salvador is down about 50% on their holdings.
Yeah, I think they are. Because their average Bitcoin price was like 40K, 40.5, something like that.
Mm-hmm.
And again, I bet you Elon has not sold a single Dogecoin either. So I don't know. I think this gets thrown out for sure. But
Right.
Yeah, that's all I got.
Yeah, and I mean, like, if he wants to accept potatoes for Tesla, if he wants to accept Dogecoin for Tesla, if he wants to accept,
It's on him, yeah.
yeah, like, yeah. So let's see. The billionaire has repeatedly touted investments in cryptocurrencies in recent years. In March, he declared that he won't sell his holdings in Bitcoin, Ethereum, and Dogecoin despite rising inflation and economic uncertainty that has led many investors to sell riskier assets. The world's richest man has never disclosed how much of his wealth is tied to crypto. Yeah, surely nothing burger. I wouldn't be surprised if we never saw this story again after
No.
this.
And Elon's not gonna reply to this guy either.
Right.
It's just a joke. I'd be surprised if he did.
Mm-hmm. Yep. Very interesting. You're going to start seeing lots of people lose their minds as their crypto wealth starts to evaporate.
For sure.
But yeah, I guess we'll get on with the next story here. This one's pretty interesting. So the former president of the New York Stock Exchange has joined Uniswap Labs as an advisor. Uniswap said it's betting on her experience with TradeFi translating over to DeFi to further help them evolve their place in Web3. For those that don't know, Uniswap is the most popular decentralized exchange. I believe they outperform everywhere else in volume by quite a bit. They do absolutely massive amounts of volume. So on Wednesday, Uniswap announced that former New York Stock Exchange president Stacey Cunningham will join the company as an advisor. Cunningham served as the first female president of the New York Stock Exchange after beginning her career as a trader on its floor. She said in a statement that she believes in the potential of Uniswap's commitment to fairer markets. Uniswap is betting on her experience with TradeFi, translating over to DeFi to further help them evolve their place in Web3. Cunningham has also been listed as one of BBC's 100 women and joined the New York Stock Exchange Board of Directors in December 2021. Uniswap enables automated transactions between cryptocurrency tokens on the Ethereum blockchain using smart contracts. Uniswap is considered a decentralized exchange utilizing liquidity pools as opposed to Binance, a centralized exchange serving as a market maker. Cunningham's existing experience with the trading floor, trading traditional stocks, the NASDAQ, the New York Stock Exchange, all appear to be relative to Uniswap's mission. Back in May, Uniswap revealed it had surpassed 1 trillion in trade volume across roughly 4 million addresses. This placed the exchange ahead of other players in the crypto sector, such as Crypto.com and Kraken. On Wednesday, the decentralized exchange saw the price of Ethereum flash crash to $950 after a whale dumped 93,000 ETH over the course of 6 hours. So, I think it's pretty sweet that Uniswap surpassed some of these massive exchanges, such as the Crypto.com and Kraken, in volume.
Man, they are huge, and they are. I love Uniswap personally. Yeah, more power to them, kicking butt.
Right.
And I don't know about. Oh wait, hold on. I'm seeing now that they surpassed. Yeah, their volume as a decentralized exchange is larger than some of the biggest centralized exchanges out there. Insane.
Yeah, I'm looking at, I just pulled up the info.uniswap.org website right here. I'm looking at some of the Uniswap V3 liquidity analytics. We've got volume peaking in December at 69.74 billion in 1 month, and that's just on V3 liquidity. There's 3.4 billion TVL. If we take a look at V2, I wonder if it's more or less here.
V2 is probably more.
No, V2. Oh, yeah, actually. So, wait, no. It's hard to say because it doesn't show the same chart. It only has daily and weekly, but, we're doing $6.5 billion in volume in a week around November.
Ooh.
So, absolutely massive
Crazy.
exchange. But I think bringing in people so high up from the stock market is going to be a good thing, especially as regulations start to evolve and creep closer. Having these people that are connected in the current finance world is surely going to make some of that negotiating and dealing with regulation easier for these massive platforms such as Uniswap. But very, very cool to see. Let's go ahead and get on to the next article here. So the Kraken CEO doubles down on anti-woke culture, says triggered employees should leave. I believe Elon Musk said something about this recently, like in Tesla or whatever, or it was with the Twitter fiasco or something like that. Anyways, the mission above all, says CEO Jesse Powell, adding that woke activists among mostly new hires have been sapping company productivity. As the crypto market continues to melt down, Kraken CEO Jesse Powell took to Twitter to emphasize a return to a crypto-first culture, as the early Bitcoin exchange announced that it would continue hiring, reframing diversity and inclusiveness in the process. We're going to keep building and hopefully do a better job of filtering up front. Powell tweeted, I think we've developed some really thoughtful policies that might not appease woke activists, but work for the other 99% of the world. In a blog post released today, Kraken reiterated its mission of financial freedom and inclusion while emphasizing that different opinions are welcome. We will never ask that our employees adopt any specific political ideology as a requirement for our workplace, the company wrote. That said, we ask that our employees respect the individual rights, privacy, and freedoms of others. Crypto is a freedom movement, and Kraken will remain a freedom company. I think that is a good move. I'm not surprised that he said these woke activists are sapping company productivity. They tend to care more about feelings than anything
Results.
else. Yeah.
Man, he is super based. And I like how he threw in that little 99% jab.
Right. Right. Yep. Really, you hear about like wokeness so much because they just scream. They make themselves heard because they just are very loud. And
Yeah, it's a small minority, but they're very vocal.
right.
And a lot of the media likes to capitalize on that and kind of give them a platform.
Right. It just stirs up everyone's emotions, which, is good for engagement. Whether you agree with them or disagree with them, they surely are all about their emotions,
That is true.
So the story goes on to say, but that is easier said than done. And while Kraken says that belief in the company's mission is a must, Powell says there are about 20 employees out of 3,200 who are not totally on board. What are they upset about? Powell asked. Silicon Valley's version of DEI, diversity, equity, and inclusion. Pronouns, whether someone can identify as a different race and be allowed to use the N-word, whether differences in human sex exist at all, being respected and unoffended, being harmed by violent words. Powell attributed this discontent to fast-paced hiring without enough emphasis on culture plus mission fit during a time when crypto was, as Powell puts it, super hot. 60% have been with the company for less than 6 months, so no biggie, except 20 unhappy people can sap the productivity out of another 400 with little effort.
Ooh, yes. Let me touch on that real quick before we move on.
Right.
I have a lot of background experience in building businesses and management.
Mm-hmm.
I will tell you firsthand that regardless of the amount of people who work for you, if you have one person in your team, and it's like a team of 20 or 30 or 40 people, if you have one person there who is very negative or very like confrontational or very loud or just very against the grain
Right.
with the culture you have at your company or your business, it will plummet the team's productivity and morale. Like plummet. It's crazy. And usually the owners and the managers don't even see it until like a few months later because they're knee deep in it. They're on the ground level. So it either takes like an owner to come in and be like, whoa, what's up with everybody? And nobody really knows or notices that there's a change in them. Or what happens is employees finally get tired of it and they start talking to each other.
Right.
And then they start talking more and more. And then soon the whole group realizes like, holy crap, it's just this guy that's, giving us issues.
Mm-hmm.
So it's very important that, if you're a business owner and you have employees, if you run into these types of individuals and they are sapping the productivity out of your team, you need to get rid of them immediately. Like
Right.
immediately. So it seems like he's realizing this finally, because he said 60% of them have been with the company for less than 6 months. So probably came to realize, oh, it's these bad apples ruining it for everybody. We're all starting to talk with each other now and figure out what's going on. But that happens in real life too, and with real world companies, not just tech companies.
Right.
And it is devastating.
It's a cool and unique perspective. That's not something that I've thought about. But Makes plenty of sense.
Oh yeah, like your coworkers can make or break your work environment, and that directly affects how you perform and how you. It even affects you waking up and going to work, right? If
Right.
you have a good working environment and you like the people you work with, then you'll get out of bed and just go straight to work happy and no issues. But if you find yourself like being lazy to get out of bed, or you're like, oh, I really don't want to go to work, like chances are you either hate your job or there's somebody at your company or your team that is making you feel that kind of way and you don't even realize it.
For sure. Yep.
But yeah, tangent over, move on.
Right. So, let's see. Powell says it is a case of great talent, bad fit, adding that people got along when things were rosy, but when the market turned grim, sensitivities, misalignment, and a focus on minor slights and first world problems began. Most people don't care and want to work, Powell tweeted, but they can't be productive while triggered. People keep dragging them into debates and therapy sessions, he says.
This dude is so based. What the hell? Oh
According
my
to
god.
Powell, the problem also stems from an influx of talented people looking for a seat on the next rocket ship, not realizing that crypto is more of a roller coaster. That is very true. It's a violent roller coaster. You have to sign a waiver before you ride it. For Powell, the answer was to lay out a culture document and allow employees to agree and commit, disagree and commit, or take the cash. And according to the Kraken post, the company has expanded its benefits program to make moving on easier. Referring to employees as Krakenites, the document notes, if you value etiquette meaningfully above transparency and authenticity, then you may be uncomfortable here. The company says that it will do business with controversial television programs, podcasts, influencers, and events if it furthers the mission. Expecting or encouraging Krakenites to strive to never ever offend their fellow teammates in order to be compelled into conforming to the most vocal colleagues' societal or cultural norms leads to a significant reduction in our ability to build and celebrate diversity and inclusiveness. The document continues. Overall, I think he did a great job of elaborating his point and, explaining the culture that he wants. I suppose 20 employees out of, what was it, like 800 or something out of 3,200. That was a lot. Yeah. 20 employees out of 3,200. Not such a bad number.
Man, I commend this guy because to be somebody of like in his position with so many eyes on you and to come out and say this is like, I applaud him. This is very respectful, and these are the kind of people you want to work for too. Yeah, kudos to him for sure.
100%. Yep, I think this is something we're going to see quite a few companies do. I don't know. I like to keep politics out of this, but companies are currently really either picking two sides, which is this route or the woke route, and there's just not really a middle ground nowadays.
Yeah, you're kind of being forced to not be in a middle ground position anymore. This is getting into some globalism stuff, but
right.
The reality is that they're really pushing to separate, communities and people in general, because it's easier to divide and conquer. Mm-hmm. So there is very soon not going to be a middle class. There is very soon not going to be a middle ground. You're either Democrat or Republican. You're either rich or you're poor.
Right.
And you either live on one side of the train tracks or the other. That's it. So, unfortunately, unless more people start waking up and getting woke, but not in that sense. Mm-hmm. At least not what some people would think it means.
Just
it's
woke out of the matrix.
Gonna continue. Yeah, not going woke,
Right.
becoming awake and aware. Geez, we are all over the place with this podcast
I know.
episode, but I kind of like it.
Yeah. No, it is a good time. Let's see.
Yep. I think that wraps it up.
Okay. Yeah, I had another tab open here. I thought there was another story, but looks like that is the end of it. Well, quite the podcast. Hope you all enjoyed this week's Crypto Club. Because we're on episode 9, episode 10 coming up in the blink of an eye. You know,
Yep.
This has been.
And before you sign us off, just make sure you check out CoinScan. We are definitely going nowhere, and we plan to continue building, through bullish times and bearish times, because we have a vision and a belief that we can really disrupt the current system and, the current status quo of DeFi and, altcoin investment, stuff like that. So definitely check us out, do your research. If you have any questions, hop in the Telegram or Discord. We'll be happy to help you or questions.
100%. We're building some of the most innovative trading tools that I think crypto has ever seen. So if you'd like
There's a lot more coming. They don't even know about it.
They don't. But, if you'd like to learn how you can use our platform to your advantage and really utilize the edge that we do give our users, make sure to check us out. All of links will be in description. And this is the CoinScan team signing out.